Big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto, either Bitcoin or USDT, as collateral to trade against these pairs. If you want to find out more about them, then check out the links down in the description. And if you do want to trade with them, then use our codes below to get up to a 7,000 USDT deposit bonus and 25% off trading fees. So thanks once again for sponsoring today's video.
Good morning, gang. Good morning. Welcome back to this week's altcoin update. First and foremost, as usual, nothing discussed today is financial advice. I'm not a financial advisor. It's for educational purposes only. And now that's out of the way, what a week it's been. Altcoins have been pumping. Bitcoin's been pumping. Everyone's making buck. It's been a good week. You know, the volatile markets, it's always great. It's good trading conditions, but it's not the time to be getting over greedy. Like the sentiment seems to be is on Twitter and YouTube. You know, everyone's talking about new all-time highs on most altcoins, Bitcoin, everything else. But effectively, most things are back at range highs. So do we get bullish at range highs? No, we don't. We take profits and we potentially start looking to hedge our positions. So, quick recap. FTM, Phantom. Well, we're looking at this yesterday. Last Tuesday, if memory serves. And we'll give you a few options. Either looking back down at the EQ of the range, where it would be an area of interest, or potentially, if we did get a pump back up, we're going to be looking for various regions. Obviously, I did explain that I was still short up here, and I was saying last week that is it a good idea to short here? Well, no, it wasn't a good idea to short here because you were going back into the EQ, which wouldn't have been a decent move from a risk to reward point of view. What, he stops going up here to get this part of the move? It's not really worth it. I was saying if you want to short, then you want to wait for a higher move. So in the end, we did end up getting a higher move back into the deviation of the range fib tool that we use in the group, and we had another nice rejection of it. So good opportunity to compound shorts if you were short higher. Obviously, you've taken profits down here once you've seen these change around. Low time for a market structure. Good idea to compound if you were. And there you go, you got another move down. Now again, we're having a bounce off the range highs. This white line is the range highs. So what happens here? Well, quite simply, if we just remove some of this stuff, if we have another bounce here, then I'll be looking to take out these highs, get those stops. If we get acceptance back into this range, then you can be looking for a move down again, back looking towards that EQ, which would nicely take out the stops from here. Again, we're just chasing where the liquidity is. That's how price action moves. It just chases where the liquidity is. And we know that there's going to be stop losses under these levels. Excuse me. So naturally, the EQ will potentially be a good opportunity. If you get a reaction there and a change of market structure to the upside, then you've got a long opportunity. If you don't get anything and it just continues rolling over, then again, we're looking back down in this region. Okay. If we do pump up and we take out all these highs and we carry on running, well, quite simply, we're going to be looking back up into these old range lows here, this purple line, which is around 92 cents. And just above, it's a bit of a region, is this, because obviously we've got this old value area low here as well, which is coming in roughly around $1, give or take. So you've got a nice zone here, effectively, where if you are long, you'd definitely be looking to take profits and, again, potentially counter your position, hedge your position. Okay, so it's a quick recap on FTM. The other one we're looking at was OP. Once again, what we're talking about, you know, we had a lovely harmonic here in play, which then came down to the D leg for a good long. And very similar to FTM, we've come up, we've not quite hit the outside deviation. We have come back in, deviate back inside the range once again, and then we've come up and we've hit this first standard deviation of the range fib tool. Okay, so again, you know, is this a long or a short opportunity? Well, for me, there's no trade here because we're just hanging around between two significant levels. Come back down here and hold, maybe. You've got an opportunity to play it back up. Come back up here, take out these highs, and probably at that point you'd be looking at to take out the overall highs into the outside deviation, and you potentially got another short trigger. But right now, it's kind of in no man's land. It's not something I'd be interested in right here. You know, this is on the back of a significant pump from the lows to the highs. It's 400% up. You know, if you're chasing this, and that's all you're doing, you're chasing, you're not controlling your emotions, You know, you're trading effectively P&L, which trading your P&L is a really bad idea. And anyone in the group understands that. Right, so that's the recap. So today we're going to talk about 3 coins. We've got bico, uniswap, and shib, as requested. Now bico is a position we've been looking at in the group, and we've been trading this very, very well, based on the latest altcoin strategy that I've given the guys. So looking at this, obviously it's just a coin that's gone down, and then we're now in a very long period of sideways, potentially, accumulation. I'm not saying it can't go lower, because it can. But if we draw an overall volume profile, we can see that all the volume is down here, which makes sense. Coin opened up, huge sell-off, and now we're in this sideways range. Okay, we've got past the point of control. We've tried to do it before, deviated back under, and then we broke back up again, and now we're starting having a nice pullback. So what are we trading on this? Well, quite frankly, our trade is based on this level right here. So this is the trade that we're currently sat in, and there's a fair few of us in the group that sat in this, because this is something I handed out in my personal trading plans. This was going back when it happened, which was what, Monday the 13th. And I was saying in my personal trading plans, as mentioned in the Copilot's chat, altcoin charts this morning, bico is starting to look interesting, assuming the BTC pair can show some strength. And this is actually based on a strategy that I've taught the guys in the group recently. And it's what we've titled the module, it's altcoin module 3, and it's a swing trading guide. And it's probably the most simple strategy that you can have to trade altcoins to get the larger position plays, okay, to get the larger moves, catching the swing positions. So obviously if you do come over to our website and you want to join us, there's the website. We've actually had a bit of an update on the website to make it look a little bit cleaner. First and foremost, come into our free Discord here, click this link and you'll get access to our free Discord, or you can click down here. And then obviously if you want to take your trading to the next level, we've got our Copilot's course. There's a bit of an overview of the course. And obviously we've now created a new page called the video library, which basically gives you a snippet for what's actually included in the Copilot course and all the videos that we have covered. So you can actually have a bit of a look through to see. And obviously we've got the altcoin modules down here. So yeah, if you do want to join, come over to our website, check it out. You'll get access to not only all of this education, but you'll also get access to my personal trading plans within the Discord, and so much alpha, it's unreal. So yeah, if you really do want to learn how to trade, then check us out. Anyway, so this came down to quite simple, really. The actual strategy is not actually based on this chart, but what we're going to see is quite clearly got a low here. We've got a high here. I'm going to use this high because we're on the daily chart here. And all we've had, quite simply, is a range-bound environment. So we've created our first low. We've come up back to this old daily level up here, create the high. So that's the high of the range. We've had a deviation of the high, come back down, hovered around the EQ, flopping around, back into the range high, lost the EQ, back test, and we're just falling down. And then we've deviated out of the low of the range, come back in, and retested. And for additional confluence for this, it's quite simple. We'll just draw a fib retracement. We'll throw it on the retracement, and we can see we came back into the golden pocket. Now, if you understand Fibonacci, you know that golden pocket is a good place for support. As long as you've got other areas of confluence, you don't just trade a golden pocket by itself, but if you've got other areas of confluence around there, then you've got a good trade. And in the end, this trade played out perfectly, came back up into the EQ, and we're now seeing a significant rejection. Okay? So in the end, that was roughly around a 8-hour trade. Not bad for a day's work. Okay? So, what can happen from here? Let's get rid of this. Am I interested in trading this level here? No, not particularly. Let's throw out a volume profile first and foremost, so we can see what's going on locally. And there we go. So, if price does continue to come back down, first and foremost, I'm going to be looking at this point of control, because it is a very high volume point of control compared to the rest of the range. Okay, do we get some support there? Do we get a change in market structure there and start moving back up? Well, there's one option. Option 2, quite simply, we can see on the volume profile here, we've got very thin volume in this gap here, which effectively is this region between the point of control and the overall range lows. So the next option would be coming into the range lows as a bit of an area. If it does come back into these range lows, potentially looking for a stop hunt, which would include my own stops, but bear in mind my stops are now to break even because I've had to take profit. Potentially a stop run, come back down, change your market structure, and back up. You've got a long opportunity there, which could, coincidentally, tie in with the value area low. Okay? If that doesn't happen, quite simply, I should be looking back down at these outer deviations. If it continues to the upside, then first and foremost, it's got to contend with the EQ / value area high, flip this, and then you'll be looking as a take profit 1, and then the overall highs as a take profit 2, because obviously this is a big wick here. So you come back along there, you'd be looking for it to take it and then have a pullback. Now, whether that's a big pullback or a small pullback, you'd have to wait and see in real time, because nobody can predict that. But if it's only a small pullback, then we could potentially look for the overall range highs. Okay? It's just simple. It's level to level. It's everything is still range bound right now. There's not many things that are creating, new all-time highs, and we're on blue sky breakouts. So therefore, while we've still got historic data, historic SR levels in play, then we use them. And this is the difference between trading a bear market and trading a bull market. A bear market, you've got all this data to go off. This is the beauty of it. You've got all these key SR levels to go off. So we know where we can take profits and where we're potentially looking to hedge as positions. But when you're in a bull market and you've got none of this, when price is quite literally taking out the highs and then continuing up, then we have to change the strategy. And then we start to look at other things like fib extensions. Okay? But right now, we're still in a sideways / down market. Oh, didn't mean to do that. So while we're still in that market, then we use historical levels to find levels of resistance and historical levels to find areas of support. Okay? So quite simply, we're just range bound. Okay? Next, Uniswap. Let's have a look at Uniswap. So overall, let's throw on a volume profile. And clip it onto there. And there, right on. Right, okay. So we can see here that Uniswap obviously had its parabolic run. It's come back down. It's come back into the point of control. 1 bounce, 2 bounce, and then we're now hovering above it. So locally, it's not really showing as much, but we do know there's a volume, the point of control down here. But is there anything else that we can look at? Well, straight away my eyes are drawn to this level right here. So if we draw this level right here and bring it back down to here and throw it onto the range fib, we can see here now what's going on. So price broke down, bounced, came back down, bounced, created the range low, EQ, range low, EQ, range high, deviation. So it's just, again, it's another one that's range bound. And right now we're back up at the range highs. We've just on Sunday taken the liquidity from this previous high. So what could happen next? Well, quite simply, option 1 would be it folds over. We've got lots of stops beneath here. It's quite clear to see that there's liquidity down there. So again, you'll be looking back down at this EQ. Get a change in market structure, you've got a long. Okay? One thing we should probably do is let's throw it on a volume profile for this range. You can see, yep, there we go. So we've got the point of control just under this EQ. So we've got one thing there. That's a potential for support. If that doesn't hold, then you just let it roll over some more. Okay? Let it roll over some more. You've got your value area low down here. And if your value area low doesn't load, then ultimately you're looking at this macro range point of control down here, / range low entirety. Okay? Very simple. It's just level to level. Would I be long in here? No, I wouldn't be long in here. Why would you long here when you're at range highs? Okay, similar to Bitcoin, where Bitcoin is right now, it's at the macro range highs. You don't long into range highs, you don't long into resistance, just like you don't short into support. But if it does come up, then we've still got liquidity above these highs that's not been taken, because this week didn't take it and this week didn't take it. So we've still got liquidity up here. So we could still see another SFP for a potential short trigger. And if you don't see that, then realistically, I'd be looking for a higher run within
this consolidation up here. So you'd be coming up towards these outer deviations. Okay. So once again, from here, I'm not really interested in the trade. I didn't personally trade this swing failure pattern here. But if I did, then, and it does start to roll over, then obviously you've got your value area high, and then as we said, down to your EQ. But it's just simple. It's level to level. Okay. But right now we're up against range highs. So it's not a place I'd personally be looking at longing. Okay. So that's Uniswap. Dead straightforward. SHIB, what time are we on? Just keeping an eye on the timer. We're 15 minutes in, so let's make SHIB short and sweet. Again, another one that's requested. The ultimate shitcoin. SHIB, we can see here, hovering around the point of control, the macro point of control. We can see up here, obviously, the volume's super thin. You know, if anyone was around back in 21, you know, this was the parabolic run, and everyone was screaming it's going to go crazy and making up some stupid profit targets, which would have taken its market cap beyond the entirety of crypto and yada yada yada. And by the end of it, you know, a lot of people FOMO'd in up at the top and then got wrecked, and still potentially holding on to these positions, you know, massively underwater. You know, this is what FOMO does. You know, 91% down from the highs. It's ridiculous. Okay, so what can we see here? Well, we can see first and foremost that we've got a huge gap on volume here. Okay, which is effectively this area here. Okay, so that's something to be aware of. If it does take out these highs with significant volume, then you can be looking for a run back up towards this level. Okay, and this level on the chart, that's, yeah, I'm not even going to try reading how many zeros that is, but it's 2188 if anyone's looking at it on the Coinbase chart. Okay, so your next real resistance comes in. But let's come down and let's have a look, because quite simply it looks like it's range bound. Let's try a volume profile from here. And don't like that. Yeah. But I might take the overall lows down here, because this looks a little bit cleaner. There we go. Right, so we can see here that we're just range bound. So we've got a daily resistance here, which is creating our range highs. And then we've got the lows here, which obviously we've tried a few times, which creates the range lows. And when you are drawing a range that you want to see lots of reaction at certain levels. So obviously the outside, first point, second point, didn't quite get there on this point. And obviously your EQ has got plenty of interaction. And more so, most recently, you've broken through the EQ, back tested it as support into the macro point of control, and then we've had a decent bounce. Okay? So if you was watching this at the time, and again, I don't trade SHIB really that much unless it comes into a macro area of interest for me, but you know, you had a decent long opportunity there. And if you did, then you should really be paying yourself, because you're coming back into resistance. Another thing we can do here is throw it on a volume profile to get a better idea, and there you go, there's your resistance, your value area high. Okay, so you've got that. So from here, what will be the plan? Well, again, it's in no man's land, so personally I wouldn't be looking for longs or shorts here. If you get a pullback, then we'll be going back into this EQ / point of control, first point of call, and again we've got liquidity just underneath it, and we also have these liquidity wicks down here. So if it does come down here, takes out this, change your market structure, then you've got potential long opportunity. Then watching back at the value area high, and if no reaction there, then you'd be looking back up at the range highs, which would take out these highs here. Okay, get no reaction there, comes down lower, then first and foremost you've got your value area low, which has been a decent level in the past in terms of volume. Okay, so do you get support there? If not, let it roll over, and if you let it roll over and it comes back down to the overall range lows, then you're getting a liquidity grab of these. Okay, it's very simple, it's just level to level. Okay, look where the stop losses are going to be. If you're looking at that chart, what you've got to ask yourself is, where would people, if people were positioned long here, where would their stop losses be? Well, quite simply, they're just going to be just underneath, aren't they? Especially if prices moved all this way. You know, anyone that's smart they've now got the stops to break even where they entered, which will be in these sort of regions, or they're still being a degenerate and they've not taken any profits, and the stop losses are still hovering in this region here. Okay, just like anyone that's shorted up here. Well, the stop loss naturally is going to be in this region, isn't it? Let's be honest. Just like this first time this wick came up, you'd have a pocket of stop losses there. what happened. It came up, took that pocket of stop losses, and then pulled back. And this is what happens. So it's looking what's going to cause pain to people. Where's people's stop losses? Where's the liquidity? Okay, that's what you've got to think about when you're trading. Okay, so to the upside, as I said, range highs, taking out these highs. If not, then you're looking at that first standard deviation, which would take these highs. To the downside, you've got your EQ once again, but you have got liquidity under there. Value area low, range low. And if that didn't hold, then you'd be grabbing this liquidity here and you'd be coming into the macro value area low down here, which again, lots of zeros and 662. Okay, quite simple, level to level. Right, hopefully you've learned something today. If you enjoyed it, smash that like. Don't forget to subscribe. And as I say, if you want to take your trading to the next level, then come check out our website. Links down in the description below. And until next time, gang, as you were, bye-bye.